All right, let's dive into this fascinating world of money. It's something we use every day, but I bet most of us haven't really stopped to think about, like, where it came from, how it works, and especially what it might look like in the future. So we're going to trace its evolution from those early barter systems all the way to, the rise of Bitcoin.
Yeah, it's a wild ride, a real journey through human history and psychology.
So to kick things off, let's start with a really basic question. What is money?
It seems simple, but it's actually a pretty deep concept when you really start to unpack it. At its core, money is like a ledger, a way of keeping track of who owes what to whom.
Okay, like a giant IOU note for society.
Kinda, but it's not just about scribbling down debts, it's about trust. What makes a seashell, a gold coin, or even a digital token function as money is trust. It's whether people believe it holds value and will continue to hold value in the future.
So it's like a collective agreement then. We all decide that this thing, whatever it is, represents something valuable.
Exactly, and that agreement has taken many forms throughout history. Imagine early societies, small, tight-knit communities. They didn't really need money. They had strong social credit systems. I'll share my food with you today. You help me build my hut next week. It was all based on trust and reputation.
Makes sense. Everyone knows each other. But what happens when those societies grow larger, start interacting with outsiders?
Things get more complex. More formalized forms of money emerge. Think about bartering. You have a cow, you want shoes. You need to find someone who not only wants a cow, but also happens to be a shoemaker with shoes in your size. It's a logistical nightmare.
You hear economists talk about the double coincidence of wants.
Exactly. Early forms of money were basically solutions to this bartering problem.
I'm really curious about these early forms of money.
Oh, there are some fascinating examples. Tribes on the Pacific coast of North America used dentalium shells as currency.
Seashells as money. That's wild.
I know, right? These little tooth-shaped shells, they were relatively rare, durable, difficult to counterfeit, all important characteristics of good money.
And I guess visually appealing, too.
Yeah, people have always been drawn to shiny things. Another example is wampum, made from clam shells by tribes on the Atlantic coast. These beads were initially valued for their beauty and ceremonial use, but eventually evolved into a widely accepted form of currency.
It's amazing how something decorative can become so central to an economy.
It really shows the fluidity of money. As societies become more complex, we see even more sophisticated monetary systems. One of the most intriguing is ancient Babylon.
Okay, Babylon. What's so special about their money?
Well, they were way ahead of their time in terms of financial innovation. They had systems for weights and measures, essential for standardizing trade. They also had commodity money, using things like silver and barley.
So they had like the ancient equivalent of cash.
Yeah, but they also had written credit. They used clay tablets to record debts and transactions.
Like ancient IOUs.
Exactly. This system allowed for more complex economic activity and facilitated trade over longer distances.
Wow, so the beginnings of a banking system thousands of years ago.
It's mind-blowing. They even had concepts like custody contracts and legal tender, foundational elements of modern finance.
So they really laid the groundwork for the systems we use today. Speaking of laying the groundwork, our sources mention a cool example from the online gaming world, the Stone of Jordan ring in Diablo 2.
Oh yeah, that's a great illustration. It shows how even in virtual worlds, the need for a reliable form of money emerges.
So in the early days of the game, this ring became super valuable.
Incredibly sought after, it had unique properties.
Like finding a rare, powerful item in a video game.
And because it was so rare and desirable, it became a de facto currency within the game.
Players were trading other virtual items for this ring,
using it as a medium of exchange.
That's amazing. So even in a purely digital realm, the principles of economics still apply.
Absolutely. People will always find ways to create systems for exchanging value, whether it's seashells, virtual rings, or promises on clay tablets.
Okay, so we've seen shells, beads, digital rings.
Yeah.
But eventually, gold and silver emerged as the dominant forms of money for centuries.
Right. They possess qualities that make them well-suited as money. Their supply grows slowly relative to existing stockpiles. Economists call this a high stock-to-flow ratio. Second, they're durable, don't easily corrode. And third, they've always held a certain allure, a monetary premium. People are willing to pay more for them. than their pure industrial use would suggest.
So it's like gold and silver had this intrinsic value beyond their practical uses.
Exactly. But even gold and silver weren't immune to manipulation. Governments throughout history have been tempted to debase their coinage, mixing in cheaper metals to create more coins.
So they were trying to cheat the system.
In a way, yes. And this debasement often led to inflation. Prices go up as the value of the currency goes down.
It's a lesson we seem to keep having to relearn. But it seems like we've arrived at a crucial turning point in the history of money. We've gone from shells and beads to gold and silver. But now we're in the age of fiat currency. Money isn't backed by any physical commodity at all.
Right, the move to fiat currency is a relatively recent phenomenon. It raises all sorts of questions about trust, power, and the future of money itself. But we'll delve into all that in the next part of our deep dive.
Yeah, it's wild to think about, right? But the money we use every day isn't backed by anything tangible. Like gold, it's basically faith. Faith in the government, faith in the economy.
It's true, we all just kind of agree that these pieces of paper or numbers on a screen, they represent value. But how does that even work? How is fiat currency created and destroyed?
It can feel like a magic trick. The key is understanding the difference between base money and broad money. Base money is the foundation. It's the physical cash we use, plus the reserves that banks hold at the central bank.
Okay, so base money is like the physical anchor. But what about all the digital transactions, buying stuff online, paying bills? That's where broad money comes in. Checking accounts, savings accounts, money market funds, all those financial instruments. And here's the thing, a lot of this broad money is created through debt.
Wait, so when a bank gives me a loan, they're creating new money?
Essentially, yes. Let's say you take out a loan to buy a car. The bank doesn't just hand over cash they had sitting around. They create a new entry in your account, increasing the total amount of broad money in circulation.
Wow, so money is literally being created out of thin air.
In a way, yes. And when you repay that loan, that money is essentially destroyed.
Okay, so it's like a constant cycle of creation and destruction, all driven by debt. And this whole system is managed by central banks, right?
That's right. Central banks control the money supply, influence interest rates. They can inject liquidity by buying government bonds, lower rates to encourage borrowing.
But what if they mess up? Our sources talk about the potential for policy errors.
They're not infallible. One interesting concept is the Cantillon effect. It describes how the uneven distribution of new money can create winners and losers.
So it matters who gets the new money first.
Exactly. Governments, large institutions, they benefit because they get the money before prices rise.
While everyday people feel the effects of inflation first.
Right. If you're getting a raise, maybe inflation isn't so bad. But if your income stays the same and prices keep going up, it hurts.
Makes sense. It highlights the challenges of fiat currency. Centralized, subject to political influence. Which brings us to cryptocurrencies. Our sources present them as potential challengers to the existing system. Decentralized, censorship-resistant.
Yeah, the emergence of cryptocurrencies like Bitcoin is fascinating. A completely different approach to money, based on decentralized networks, cryptographic algorithms.
But there are so many cryptocurrencies now. Proof of work versus proof of stake, scalability, energy usage.
It's a complex landscape. Not all cryptocurrencies are created equal.
So what are the benefits of cryptocurrencies over traditional fiat currency?
Well, one argument is greater financial inclusion. Billions of people lack access to traditional banking. Cryptocurrencies are borderless, permissionless. They could provide a way for these individuals to participate in the global economy.
It's like giving everyone financial tools, regardless of where they live.
Exactly. And because they operate on decentralized networks, they're more resistant to censorship, government control.
So governments couldn't just shut down a cryptocurrency network.
It's the idea, but it's more complicated. Governments can still try to regulate, restrict use. There's always the risk of technical vulnerabilities, hacks.
Right, no system is perfect. But what about the criticisms of cryptocurrencies? Volatility, environmental impact, use for illegal activities?
All valid concerns. The price of Bitcoin can swing wildly. It's risky.
Yeah, it's like a roller coaster. What about the environmental impact? I hear Bitcoin mining uses a lot of energy.
That's true for cryptocurrencies that use proof of work.
Proof of work, what's that?
It's how they secure the network, verify transactions. Computers solve complex problems. It requires a lot of computing power, which means high energy consumption.
Okay, so a trade-off, decentralized network, but at an energy cost. And what about the potential for illicit activities?
Cryptocurrencies can be used for illegal purposes, just like cash.
So it's about how it's used, not the technology itself.
Exactly. Criminals will always find ways to exploit any system.
So where do we go from here? What's the future of money?
That's the million-dollar question. Will cryptocurrencies replace fiat? Will we see new hybrid forms of money? Will governments issue their own digital currencies?
So many possibilities, lots of uncertainty. But the world of money is constantly evolving.
Absolutely. And it's more important than ever to stay informed, engaged. The future of money is, in many ways, the future of society.
It's about access to financial resources,
Mhm.
control of money, how we value and exchange in the digital age, which leads us perfectly into the final part of our deep dive. We'll explore the potential societal impacts of these trends. Stay tuned.
All right, so we've gone through the history of money from, those early forms like seashells and all the way to Bitcoin. But what does it all mean for us in the grand scheme of things?
That's the question, right? What are the bigger implications of all this?
Our sources dive into some pretty big picture stuff, like the future of money and how it could reshape society. One concept that really jumped out at me was monetary neocolonialism.
That's a mouthful. But it's a really important idea.
What does it even mean?
Well, in a nutshell, it argues that the current global monetary system, with the US dollar as the dominant reserve currency, that it can actually create imbalances that disadvantage developing countries.
So it's like the global financial system is kind of rigged.
It's more nuanced than that, but that's the gist of the argument. The sources go into the history of the petrodollar system. Okay, petrodollar. Remind me what that is again.
Basically, after World War II, the US dollar became the world's primary reserve currency. And this was largely due to its link to oil.
Because oil is so essential.
Right, and most oil transactions are done in US dollars. It created this huge global demand for dollars.
So that gives the US a lot of power.
Exactly. They can run large trade deficits, finance their spending through debt because other countries need those dollars to buy oil and other goods.
But our sources argue this system isn't sustainable, and it creates problems for developing countries.
They point to things like the conditions imposed by the IMF. When countries need loans.
The IMF, that's the International Monetary Fund, right?
Yeah, and those conditions often involve austerity measures or currency devaluations, which can have devastating effects on people's lives.
It's like these global financial systems. They can be as impactful as wars or natural disasters.
Absolutely. The decisions made by central bankers, finance ministers, they have ripple effects around the world.
So is there a way to create a more equitable global financial system?
That's the question, isn't it? The sources explore some possibilities, like the rise of a multipolar world,
What does that mean?
a world where power and influence are more evenly distributed instead of one dominant superpower.
So not just the US calling all the shots.
Right, and this could lead to the emergence of alternative monetary systems, maybe even ones less reliant on the US dollar.
And could cryptocurrencies play a role in this?
Potentially. Some argue that cryptocurrencies could help level the playing field, give more financial power to individuals, smaller countries.
It's an interesting idea. But even if we move away from the dollar, there are other challenges. Like, our sources also talk about the erosion of privacy in the digital age.
Privacy is crucial. As our lives move online, governments and corporations gain access to more data. The potential for abuse is huge.
The sources make some scary comparisons to governments using financial surveillance to control their citizens.
They argue we need to protect our financial privacy, especially with new technologies like central bank digital currencies emerging. Yeah, central bank digital currencies, basically digital versions of fiat currency,
Issued by the government.
controlled by central banks.
So instead of physical cash, we'd use digital tokens from the government.
That's the idea. Proponents say CBDCs could increase efficiency, reduce crime, but critics worry about government control over people's finances.
It's like the ultimate panopticon for money. Every transaction tracked and recorded.
It's a powerful tool and potentially dangerous.
We need to have these conversations, think critically. The future of money isn't just about numbers. It's about human rights, freedom, power.
Exactly. It's a reflection of the choices we make as individuals and as a society.
So as we wrap up our deep dive into the world of money, what's the one thing you hope listeners take away?
I hope they understand the complex history of money, that it's constantly evolving, and that they have the power to shape its future.
I like that. So to our listeners, keep exploring, keep questioning, keep learning. The future of money is in your hands.